Hi, how's everybody doing? I am Jacquet and I am in the real estate, insurance, and finance industry. Thank you guys for being here. Thank you guys for watching this video. I appreciate every single one of you guys, and thank you. Guys, don't forget to thumbs up this video for me, and don't forget to help me share it out with your friends, your family members on Facebook, Instagram, Twitter, LinkedIn, wherever the platform is that you guys use. I definitely appreciate it. Thank you so much. And guys, as you guys see, there's some pictures behind me. That's my son that made that for me. My baby made that for me, so I left it up there so that you guys could see my beautiful artist coming up. Okay? Guys, I have my website, which is up and running. So I'm going to take you guys to the website. That's another way for you guys to get hold of me. For those of you that doesn't know a proper way to connect with me, I'll take you guys to the website so you guys can see the different avenues on how to get in touch with me and how to get hold of me and some of the services that I do provide. So stay tuned and don't watch this video till the end. There's a lot of great, powerful information that's about to come through this video. The moment that I introduce on my website, you guys are going to see massive and powerful information. So stay tuned. I definitely thank you guys, and I'll see you guys soon. Right on the other side, and here it goes now. All right, guys. So here it is. This is my website right here. And as you can see, jwjacquet, of course, this is definitely the website. And if you ever needed it to get to this website, all you got to do is type jwjacquet.com. And it'll bring you right to it, just as this. It's just that I had already previously did it prior to starting the video. So once you are here at this website, I want to take you to a key component, some of the things that you want to look for. If you needed it to find me, if you needed to know any information about me, which is some of these things here. Like for an example, if you clicked on any of these tiles, it's gonna take you directly to that web page of my financial page, which is this right here. Then you get to fill this little portion out, and of course it'll come right to me. And apart from that, let's just say you have a question or a friend of yours have a questions with regards to Medicare or anything like legacy buildings or business services or real estate. Any one of these you clicked onto is gonna go to one of my pages. So as you guys can see, I have I have so many different variation of things that's going on. So which is why it's a good thing to know this website actually is here, and you could navigate through it. And it's a way to definitely get hold of me. It's a way to kind of pinpoint some of the things that I actually deal with, some of the things that I actually do. And as you guys can see, yes, I am big in investing in the future, because I believe investing in the future is the way to go. There is no better way than that. Apart from that, guys, why don't I move on to today's video, the main point of today's video. So with today's video, as you guys can see, today's video, what you need to know about your 2020 taxes. That is one thing, and to understand taxes like the rich. Because, folks hear about taxes. When they hear about taxes, usually what they think about is just the income tax. They don't go past that. They don't go beyond that. They don't understand the full level of understanding of what's involved into taxes. So, which is why, today's video, there's a lot of great information that's gonna come about. Stay tuned with me. Do not skip this video. There's a lot of powerful information on here that you're gonna need to know, not just for this year's tax purposes, but for the years to come. All right, because the whole situation with this is I would like for everyone to have the knowledge, to have the understanding about taxes, so you could know how to utilize taxes to gain benefit, and when to shift and when to not shift as far as towards your benefits. When is the right time to make the right move, to understand your calculation of money. If you could understand money, if you and not money, I apologize. If you could understand taxes, if you could understand the avenues on how taxes work, then you'll understand the avenues on how you make money with regards to taxes. So I want you to understand taxes just like the rich do. So, but however, we're gonna start with this year, 2020 tax year. Okay. So the one thing, guys, is the stimulus check. Everybody talk about the stimulus check and the stimulus payment. But however, a lot of folks doesn't really know, doesn't really understand the full understanding, the full scenario behind, the stimulus payment. They think it's just government funding to help society, to help move economic activities, to help move economic businesses, to help keep things afloat. Yes, that is partly true, and there's no wrong answer. There's never no wrong answer. That is partly true. The stimulus check was designed and was issued to help stimulate economic movement, meaning that so businesses will continuously to have some sort of effort. If you guys notice that during that time of the stimulus check, if you were trying to buy a refrigerator, a freezer, a deep freezer, you try to buy a TV online, you trying to buy a microwave, it shows that it was in stock, but it was out of order when you go to place that order, meaning that it wasn't designed for us to go out and splurge. It was designed to help keep the economic activity flowing so that the businesses could stay afloat, because without businesses the economy will start to fall. So some of those let me get a little bit into depth about that, so you guys can have a full understanding. For an example, the one thing is the one question that folks should be asking, I don't know if folks are asking it, but I'm going to tell you, is this stimulus check, what is it taxable? Is it not taxable? That is a very important question. That is a very, very, very deep question that everybody should have the knowledge about. So think about it this way: if you were single, you got a $1,200 check, and if you were a couple, you got $2,400 check, and if you had a child on top of that, you had a $2,900 check, because they gave a $500 per child in the household. If you think about that, if you think of the breakdown from that, it's the same thing of when you file your taxes. All that is, however, let me answer that question for you. No, it's not taxed. It's not going to be taxed, and it's not going to be considered tax in the following years to come, and in the next 3 years. No, it's not. They're not going to tax you on that money. However, it is an early disbursements from your taxes. It is early funding from your taxes, so which is a good thing. However, there's some other stipulations with that, and I'm gonna get into that in a little bit. Just bear with me and stay with me, and we will get to talk about all that good stuff. So the one thing is, it's not taxable. They're not gonna tax you on it, and you don't have to give that money back. The other thing is, it is an advance. It is a refundable tax credit in the 2020 tax year. So let me ask you something. Then, in this case, if you did not work, or if you are not working, do you have to give that money back? The answer to that question is no. No one is going to have to pay that money back. If you work, if you did not work. However, it's just not. However, it will be counted as income. It will be counted as income in the year of 2020, and when it takes into account to the AGI, which is your adjusted gross income. Now let me talk about the adjusted gross income, AGI, for a second, because AGI, there's a lot of abbreviation when it comes to taxes, when it comes to finance and things like that, and not too many people might not. Too many people might not know what it actually means, and there might be a vast majority that do know what it means. But if for those that do know, doesn't know, anyway, I'm going to tell you what it means. Your AGI is your adjusted gross income that the government looked at every year to calculate the amount of taxes that you make throughout the year to your gross income. Meaning that they take a look at your gross income, and then they look at your adjusted gross income and try and calculate to see, okay, out of the gross income, how much of that portion are they gonna tax you on? Now, here's the one thing: your that stimulus check is gonna be part of that AGI. Now, before confusion start going, out like a wildfire, let's clarify this for a minute. Like I said, it will be counted. The stimulus check will be counted as part as the AGI. However, there's gonna be another section where they're gonna separate it from the AGI. They're gonna count it as income, but they're not gonna count it as taxable income. So there's a difference. Same thing when it comes to renting. Some folks. So for some folks, it is taxable income. For some other folks, it's not taxable income. So there's different laws that governs that. So hopefully you guys get to understanding. If you don't, definitely please comment down below, and I'll definitely explain a little bit more. Don't forget to definitely thumbs me up, guys. Help me share this out so that some other folks could definitely get the understanding and the benefits behind this. All right. So that's the situation behind the stimulus check, because there's a lot of folks that ask questions about that. There's a lot of folks that really doesn't know what's involved in that with regards to that stimulus check. So with that, guys, let me take you to a little bit step further, because to understand taxes, to really take advantage of taxes, you need to understand your tax bracket. You need to understand your income. Here's the thing: some folks, when you're talking to them, when you tell them, how much do you make, and now they'll tell you how much they make after taxes. No, you need to know how much you make prior to taxes, which is your gross income. You need to know how much that is, so you could so you could know how much, what's the tax bracket you fall under. And there's ways of doing things so that your tax bracket doesn't. Oh, excuse me here. Give me 1 second. Thank you, guys. So there's ways of doing things so that your tax dollars, it's not the same. So in my last video I mentioned tithing, going to church, contributing to a church, paying your tithes and things like that. So that's the one thing that helps with the tax bracket. A lot of folks don't understand what that means. Some pastors do not understand what that means. Some pastors don't understand the tax bracket and the tax rate. So they think that when they give you the tax breakdown of what you contributed throughout the year, is you asking for that money back. No, that's not what it means. So now I don't want to get into church. That's not what this video is about, and that's not what I'm trying to explain. What I'm trying to explain to you guys is the tax bracket. It just so happened church happens to be one of the best way that I could explain that to you. So, and also the best way for me to tell you guys why you guys should pay your tithes, why you guys should be giving money to and contributing to your neighborhood, to your church, to whatever that whatever your temple, whatever that makes you feel comfortable, to whatever that you pray with. But I'm just giving the example. That's the example that I'm using to help you understand. So for an example, let's move forward a little bit. So let's just say someone that's at the 12%, which is right down here, at the 12% for a single family and married filing separately, income exceeding of 9,875 to 19,750 for married filing jointly. Now, what does that exactly mean? So let me break it down to you. So if you make $9,875, that means you are the 12% tax bracket, tax rate. That's what you are at. So that means you are at that level. If you are, if you make $19,750, for married filing jointly, that means you also fall along that guideline of 12 on that 12% guideline. That's what that means. So you need to understand that. Now, so let me take you a little bit further into why I brought up the church situation. Now, say out of that $19,750, but you gave 10% out of that to your church. Right? So at that point now, your church gives you that piece of paper with the EIN number at the end of the year. So now you fall out of that bracket of paying that 12%. I'm pretty sure, your church, your pastor, your bishop, your priest, whoever it may be, would be more happier knowing that you gave and contributed to their church. Not that I'm saying it's wrong to contribute to the government, because the government does a lot of great things with your taxes. I'll make a video about that. I'll get into details about that a little bit more. But for right now, let's just stick to this. Okay. So now you fall out of that bracket. That means now you're not paying that 12% tax bracket, which means you just escaped that. So now you just fall out of that bracket. Now for someone that's paying 22% or 22% or 24%, now that's a deal breaker. That's a deal breaker. Imagine this, imagine this. Just $500 less will take you out of 24%. Will put you into a 22% bracket. That's a major deal. That's a major deal. 2% to someone may not seem a lot, but however, take 2% of $85,525. That means a great deal. Takes that means a great deal. So therefore, folks don't really understand the mechanism behind what's behind the tax bracket. So once you start thinking like the rich understand taxes. We always hear about, oh, such and such is donating X, Y, and Z billion, millions of dollars, thousands of dollars to such and such charity. Or you think they're doing it because they love donating that much? No, it's because by them donating, it saves them from tax bracket. So now some folks will say, well, the rich get richer and the poor get poorer. The rich doesn't pay taxes. The rich doesn't pay taxes, but the rich also give to the general public, for a better cause, for a better cause or a different cause, which is why they are escaping taxes. Let me put it to you this way: Would you rather pay 10% of $10,000 to the church, or would you rather pay 12% to the federal government? The difference is a whole 2%. It's a whole 2%, and 2% goes a long way at the end of the day. 2% will definitely goes a long way at the end of the day if you really think about it. So, which is why I am asking these questions. I'm not asking that question so you could make a decision, so you could start thinking, oh my God, I don't want to pay taxes to the federal government. They are awful and they are this, they are that. No, that's not what I'm saying. Or I'm not telling you, oh my God, don't pay your taxes to your church. And is my pastor gonna give me a paper? Is that no? That's not what I'm saying. They both have their advantages. Now, let me tell you the advantages to both sides of the fence. The both sides of the fence is, if you wind up losing your job, one way or another, your church gets to support you. If your pastor is doing what they're supposed to be doing, they're going to help you. If you're going through a tough time, they're going to help you financially. At the same token, if you lose your job and you're about to lose your housing and the federal government have programs, as you guys know, so they call welfare. Some folks look down on folks that is on welfare. Well, don't get me wrong. There's two sides of every coin. All right, we're not going to get into that side of the coin, but however, they're going to help you as well with keeping a roof over your head. So, which is why you're paying your taxes. You're not just giving your money to the federal government just to give it. Look at the bus route that you guys run on, the street that you drive your car on. That's built by your taxes. That's why you pay taxes. That's the reason why you pay taxes. So that's why I'm saying, I'm not telling you not to pay taxes. I'm not telling you not to do these things. The rich also pays for the same thing that you are paying, just in a different route. Because think about it. Once the rich gives their money to that organization, one way or another, that organization is going to pay some sort of tax on that dollars that the rich are giving. So the same thing to you. If you decided you want to take the church route and you want to take the giving route, still your tax dollars is still going to be collected by the federal government. Federal government is not going to miss. No, listen, nobody is escaping. No one's escaping. And that is guaranteed. That is guaranteed, which is why they make jokes. A couple of things is guaranteed. You're gonna pay taxes and you're gonna die. Those are guaranteed. That's just a joke, just a joke. So, folks, that's why it's important to understand tax bracket. That's why it's understand to understand your gross income, to understand your adjusted gross income, so you could know how to best manage your money. I'm gonna tell you something. I'm a firm believer in paying taxes because I know the goods that it does. I like to drive my car on a smooth road, so I know it's important for me to pay taxes. So I also know I want to take advantage of that 2% tax bracket, that discount that I'm gonna get from the federal government when it comes tax time from the IRS, which is why I also pay my tithe, because I know I like to enjoy these things. That's the reason why I do it. That's not the only reason. I also do the tithing because I am a Christian at the end of the day. So yes, for those of you guys that doesn't know, yes, I am a Christian. So, and there's no secret about that. So that's another reason why I do it. I do it because I am a Christian, and two, I do it because I know there's tax breaks that comes from it. Now, why do some people don't want to get involved into that? Because they have to report that income and they have to pay the taxes for you. And yes, they also get a break. So I don't know what's the big thing about it is, because it's considered as not earned income because nobody worked for it. But whoever's preaching is working. It is a business. It's a business of the Lord. A lot of people shy away from that. I don't know why, but it is a business of the Lord. Churches cannot function without money. Churches runs on money. So let me get that part out the way, because I just feel like I needed to say that. So because I also need churches to understand tax breaks. I also need them to understand tax rate. So that's the reason behind it. I need for everybody to understand this. All right, because it's so important. If you could understand that, then you could understand exactly how the money game plays. How the rich are getting richer, how they're getting saved from taxes, and those are the key words that you need to understand. When they say the rich is getting richer and they don't pay taxes, they also pay taxes. They just pay taxes in a different avenue. All right. So now let's get to capital gain. A lot of folks do not understand capital gain, and they get themselves caught up, gemmed up into high taxes, sometimes lose everything behind capital gain because you do not understand how capital gain works. Now, let me take some time to actually explain capital gain to you, because I want you to fully understand what capital gain means. I want you to understand what's behind taxes, and how you could enjoy and also rejoice in capital gain, and how to also prevent you getting sanctioned by the federal government, the IRS, because of capital gain and possibly losing everything. I would hate to see anybody goes through that, which is why, guys, like I'm saying, comment down below. I want you to comment down below so we could have a conversation, so we could start talking, so we could start to get some of these things out the way, so you could get the proper helps that you need. Because if you only understand one side of the coin, you don't understand the other side of the coin, you're going to make a lot of mistakes along the way. And those are costly mistakes. You do not want to get to be on that side of the fence, wind up wrestling in the mud with the federal government, and they will win all the time. If they are calling and coming after you, they have a reason. Don't give them that reason. So let's talk about capital gain for a brief second. Now, to understand capital gain, I know everybody understands real estate. I know everybody understands buying and selling, right? So let's start with real estate. Say you purchased a house. We're going to make this simple with easy numbers. You purchased the house for $20,000. Now, you fixed up the house, and let's just say you spent an additional $10,000 on that house to get it functioning, to get it looking good, looking great, top notch. Everything is perfect. Couldn't be a better house than that, right? Now you end up selling the house for $50,000. Okay, now this is where capital gain comes into play. You purchased the house for 20, you put 10,000 into it, so now you are 30,000. So that 30,000, and now you sell it for 50,000. So you made a profit of 20,000. So you guys are seeing where I'm going with this. Now, here's what's gonna happen. So now the home equity that's in the home, which is your 10,000 that you put into it, That's if you purchase it, with a loan. So 10,000 goes into it and all this good stuff, and now you appraising in the property. Now, let's just say within a year you sold that house for that 50,000. Now let's just say at the time that you sold the house is assessed and appraised to be. When I say assessed and appraised, which means that's the value of the home. That's what the home is worth on paper. Let's just say now that home is worth on paper, let's just say 35,000, but you end up selling it for 50,000. So now this is what happened. We have capital gain of $15,000. $15,000 of capital gain that's under. You have to pay taxes. Most folks, what they're gonna try to do is this: they're gonna try to take that 15,000 and call it profit. No, you need to pay taxes out of that. You must pay taxes out of that. As a matter of fact, we could even take it a step further. You technically make $30,000 of capital gain on that house, because reason being you sold it in a set short time period. So now you have to pay taxes on that. There's no escaping that. There's no going around that. Capital gain goes different from single to married filing separately, married filing jointly, all that, or head of household. Each one of those have a different category. Now let's take it into stocks and bonds. Everybody loves investing so much, but at the same time you love investing, I need you to love to understand how you're gonna benefit from it. So say you purchase a stock going at $100 a share, right? And you end up purchasing, let's just say, I don't know. Let's just say 10 shares, okay? $100 a share, so 10 shares. So now we're looking at, okay, we have 10 shares times 100. So we all know that's, we got 1,000 going on. So now at this point, you end up selling it, let's just say for, I don't know, what should I say? We wind up selling it the same 10 shares, or half of. You know what? No, let's keep it with simple numbers so that everybody could understand it. Okay, so we wind up selling that same 10 shares for 1,500. So now that $1,500, you have 500 of capital gain on there that you have to pay taxes on. Yes, you have your original principal, which is yours. That's no problem. You already pay taxes on that. That's not what the federal government or the IRS is concerning about. They're concerning about, the gain you made from that. That is capital gain, capital appreciation, whichever you want to call it. That's what they are talking about. And they will come after you for their portion. Everybody know, if you owe me some money, I want my money back. If you owe me some money, I'm gonna call you to get my money back. And if you're not giving it to me, guess what? I may find the means to take you to court or whatever it is. The federal government is only doing the exact same thing. They are doing the exact same thing, except what they are doing is, which, just actually, there's no exception. Because if I take you to court for some money that you owe me, at the same time I'm gonna take you to court, I'm also gonna tag on, my wages that I'm losing by going to court, and also my gas and the time that it's taking me. So let's just say, I'm taking you to court for $1,000, and on paper I'm suing you for 3,500 when you only owe me $1,000. So I'm looking at, there's $2,500 that I'm suing you for my time, for you for me having to go and file paperwork, for me having to pay for that paperwork, me having to take time out to go to court, and me having to wait, so all these things is exactly what the federal government is doing. So a lot of times we'll say, well, I only owe them $500. So why are they trying to say I owe them about $3,000? You got to think about it. They have to hire somebody to literally sit there and try to collect that money for them. They have to hire somebody to process the paperwork. They have to hire somebody to do all the legal work for them. So that's why it's costing you so much money, which is why it's so important that you understand And I really mean you understand the ins and outs when it comes to taxes and capital gains, and understand your tax bracket. Because if you don't, these things will break you or make you. You need to understand it. A lot of folks, especially entrepreneurs, a lot of us that's on YouTube, or that's self-employed, we don't realize how serious this is. This is a serious matter, so we need to take it seriously, because it's not a joke, and they will come after you. Guys, I am Jean Jacquet. Hopefully, I did a great job explaining this to you. I did an awesome job. Don't forget to give me a thumbs up. Don't forget to like this video, share it with your friends on your social media platforms. And don't forget, to leave your comments down below, so I'll be able to get back and start explaining things to you guys, and start, helping you guys. All right.